Hello everyone, and thank you for joining today's True Trading webinar. I am excited to be here with you. My name is Mohammed Azim from Traders United. First, a disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott wave. Over a course of years, I expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. I'm also a big fan of Fibonacci numbers and Fibonacci sequence. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. Okay, so uh, these are the main topics that we're going to cover in today's webinar. So let me talk about macroeconomic events and data releases. And I'm going to first cover the previous week fundamental analysis. We got the German flash manufacturing PMI related to euro, and the affected currency pair is the euro USD. Next one is the retail sales, M over M for the Great British pound. So GBPUSD is the relative currency pair. Okay, so let's go into some more details. German flash manufacturing PMI, and we got the data release on April 23rd, 7:30 a.m. This is the UTC time. So what is the German flash manufacturing PMI? The German flash manufacturing PMI, also known as Purchasing Managers Index, is a key economic indicator offering an early snapshot of Germany's manufacturing sector. It is based on a survey of purchasing managers and measures areas such as production, new orders, employment, suppliers, delivery times, and inventories. As the Eurozone's largest economy, Germany's manufacturing data has a significant influence on the euro. The PMI, also known as Purchasing Managers Index, reading above 50 indicates expansion, while below 50 suggests contraction. Now, on April 23rd, 2025, the German flash manufacturing PMI report is the previous number was 48.3, the forecast was 47.5, and the actual number we got is 48. So we were expecting a less number, a 47.5 number as compared to the previous reading, but when the actual financial data got released, we got the number which is 48, and this number actually looks good. Now, the latest German flash manufacturing PMI came in at 48, slightly above the forecast of 47.5, but still in contraction territory because the previous number was 48.3 and we got 48.0. That's a round number. Although the figure beat expectations and the forecast, it still remains below the neutral mark of 50. So This highlights ongoing weakness in the manufacturing sector. The market reaction was, we got the euro dollar drop. Let me show you the chart of euro USD currency pair. So here's the chart of euro dollar, and right over here we got our data release, and we got the drop in price action of euro dollar currency pair over here. Okay, now despite the slightly better than expected PMI result, euro USD moved lower following the release. This reaction suggests that markets are focusing less on the marginal beat and more on the broader picture of continued industrial slowdown in Germany. The persistent contraction may fuel expectations that the European Central Bank will maintain or even increase its dovish stance. Additionally, relative strength in recent US economic data may be reinforcing the dollar's appeal and adding further downward pressure on euro USD. So the conclusion is the modest improvement in Germany's manufacturing PMI was not enough to lift market sentiment. Traders likely translated and interpreted the data as another sign of economic fragility in the eurozone. As a result, euro dollar currency pair declined post announcement, with traders reassessing the euro's near term outlook amid lingering concerns over growth and ECB policy direction. Next data report is retail sales M over M. M over M means month over month. The retail sales month over month in British pound refers to the percentage change in the total value of goods sold by retailers in uh, Great Britain, measured on a monthly basis, and it indicates the month over month growth or decline in consumer spending. It's a key indicator of consumer spending. It provides insight into the strength of the UK economy. Now, since household consumption is a major component of GDP, stronger than expected retail sales generally support the British pound, while weaker figures can weigh on it. Now, on April 25th, 2025, retail sales month or month report is the previous number was 0.7%, the forecast was negative 0.3. The actual number is in green, it's positive 0.4%. The UK retail sales surprised to the upside in April, rising to 0.4% compared to an expected decline of 0.3%. Although this marks a slowdown from the previous month's 0.7%, the data beat forecasts and points to continued consumer resilience despite ongoing cost pressures. Now, the market reaction was obviously the GBPUSD moved higher. Let me show you the chart of GBPUSD currency pair. So price actually moved higher, and the way I see it actually took out this high over here. If I go over to a weekly time frame, let's zoom in a little bit, you can see. So the high value was 1.3443, so sorry, 33, and it took out the high. And if you check out the daily price action, just keep moving up overall. We might get a top or a sideways decline because the RSI looks overbought. I will talk more about it later. So the move reflects renewed confidence in UK economic stability, with market participants reassessing the outlook for Bank of England policy in light of firm consumer demand. As the traders responded to the stronger than expected retail sales figures. That is the reason why we got a bullish price action inside GBPUSD currency pair. The upbeat data eased fears of a consumer-led slowdown and reduced the likelihood of near-term rate cuts from the Bank of England. So the conclusion is the positive retail sales surprise. We were expecting a negative 0.3 and the actual number is in positive 0.4%, gave the British pound a lift with GBP USD moving higher in response. While the pace of growth moderated from the prior month, the data underscores a still active consumer base and may delay expectations for policy easings by the Bank of England or the BOE. Okay, previous week market trends, euro dollar and British pound. Let's take a look at euro dollar. So I was expecting a top and a drop in the price action of euro dollar currency pair, and right now you can see price action is actually trying to fall back down, and it's most likely possible that euro dollar is going to break below 1.1265 price area over here. Okay, next, what we have, British pound versus US dollar. Okay, let's take a look at GBP USD. So GBP USD, if you take a look at, let's start with the higher time frame, like, check out the monthly chart. Monthly chart isn't overbought, and we might get further upside based on this price action of GBP USD currency pair. As far as the weekly chart is concerned, it looks overbought. Price action is moving up and the RSI is hitting the 70 level. It's almost there to hit it. In daily time frame, price action already looks overbought. We got the breakout right over here, and people were not expecting that kind of a breakout, but we got one over here. So it's quite possible that market is going to rise a little bit more before we actually get a short-term correction or a pullback in price action of GBPUSD currency pair. Okay, now let's talk about current week's macroeconomic events and data releases. So we have two news announcements. These two important news announcements are GDP month over month for the Canada, and the currency pair that we should care about is the USD CAD. On May 2nd, Friday, there's an important news announcement, non-farm employment change for the USA, and the currency pair that we should watch out is the euro dollar. Okay, let's look at some more details. So GDP, M over M in Canada. What is Canada's GDP M over M? Well, the Canada's gross domestic product, also known as GDP, month over month, is a key economic indicator that measures the monthly change in the total value of goods and services produced across the country. It reflects overall economic activity and provides an early signal of growth or contraction in the Canadian economy. The data is released by Statistics Canada and covers a broad range of sectors, including manufacturing, services, construction, energy, and more. As a resource-rich economy, Canada's GDP figures are particularly sensitive to fluctuations in global commodity demand and prices, especially oil and natural gas. A positive reading indicates expansion, while a negative figure suggests a slowdown in economic activity. Now, on April 30th, we are going to get the report. The previous number was 0.7%. The forecast is actually minus 0.3%, and the actual data didn't release yet. Now, a positive reading indicates expansion, while a negative figures suggest a slowdown in economic activity. So the market participants closely watch this data release for clues about the health of the economy and to anticipate possible moves by the Bank of Canada. Now, markets are basically expecting a mild contraction in April's GDP, forecasting a minus 0.3% decline after a stronger than expected 0.7% gain in the previous month. The anticipated pullback reflects concerns about slowing domestic demand and weaker industrial output and softening global trade environment. If you take a look at a chart of USD CAD currency pair, right now you see price action, just keep falling down over here. And let's see. So we have this level, an important level over here, and it's quite possible that price action might try to test this level. Okay. Why I think? Because if you look at the support over here, 1.3817, this price level is basically providing support. Now the market impact on US dollar CAD, if the GDP is higher than expected, minus 0.3%, then a stronger than forecast result could indicate continued economic resilience and reduce pressure on the Bank of Canada to cut rates. This may support the Canadian dollar, leading to a move lower in USD CAD. Now, if GDP matches expectations like 0.3%, an in-line result may already be priced in with limited immediate impact on USD CAD. The traders may then look ahead to US economic data or upcoming Bank of Canada commentary for direction. Uh, the US economic data is what I'm going to discuss next. If GDP is lower than expected, minus 0.3%, a weaker reading would reinforce concerns about a broader slowdown in Canadian growth and could increase expectations for Bank of Canada easing. This would likely weigh on the Canadian dollar and push the USD CAD higher. So the overall analysis is with the Bank of Canada navigating a delicate balance between inflation control and growth concerns. April's GDP release will be closely watched. Any surprise in the GDP data, up or down, could trigger sharp movements in USD CAD, particularly if it alters expectations for Bank of Canada monetary policy in the coming months. So the conclusion is until the actual financial figure is released, USD CAD may trade in a cautious range. However, once the GDP data is published, a stronger than expected result could strengthen the USD CAD, so the CAD, the loonie, while a weaker figure may pressure it lower as investors reassesses Canada's economy or economic trajectory. The next important economic data report is the non-farm employment change for the USA. Now, let's talk about a little bit what is the NFP or non-farm uh, employment change. Well, the non-farm employment change, NFP, also known as non-farm payroll data report, is an economic indicator that measures the change in the number of paid workers in the USA, excluding farm workers, government employees, and employees of non-profit organizations. Non-profit means the NGOs. So it is released monthly by the US Bureau of Labor Statistics and is a key indicator of the US labor market's health. Now, the previous number was 228K, and as of today the forecast is 129K. The actual data did not release yet. It's going to be released on May 2nd, on Friday. So markets are expecting a significant slowdown in job creation in USA, with the forecast dropping to 129K from the previous month's robust 228K. The lower projection reflects concerns over cooling demand in certain sectors and a potential moderation in overall economic activity. Now, the market impact on Euro USD: if the NFP is higher than expected, market is expecting 129K and we get a figure higher than that, a stronger reading would signal ongoing labor market strength and may boost the US dollar, potentially pushing Euro USD lower as traders price in a more hawkish Fed outlook. Now, if the non-farm payroll data report matches the expectations and we get the 129K number, so it means the result is in line with the forecast, may have a neutral or limited or immediate impact unless we get some kind of a surprise in wage growth, or we get a surprise in unemployment rate. So market may shift focus to future Federal Reserve commentary and its policy. And if the NFP number comes lower than 129K, which is the forecast, this means a weaker figure could point to a labor market slowdown and increased expectations for Fed rate cuts, likely weighing on the dollar and lifting the Euro USD higher in response. So the overall analysis is, as the Fed remains, let's go over to the chart of Europe over here. So as the Fed remains data dependent in its monetary policy path, the May NFP release will be critical in shaping expectations. Any surprise in job numbers could fuel volatility in euro dollar, particularly if it shifts sentiment on upcoming interest rate decisions. So the conclusion is, until the financial data get released, the euro dollar may remain in a tight trading range, and it is probably going to move sideways as traders await clarity on the USA employment picture. Once the NFP data comes out, especially if it comes out as a stronger than expected result, it could pressure the euro, and euro dollar is most likely going to fall down. Now, if we get a soft print, obviously the euro dollar is going to find support, and we might get further bullish price action inside of euro dollar currency pair. So we will see what kind of a news release we get it. Okay, now let's take a look at some of these pairs. We're going to talk about the euro dollar in detail, USD CAD, Australian dollar, and spot gold. So let's start with euro USD. So we have an important financial data release coming on this Friday, May 2nd, 2025, related to the non-farm employment number. As far as the technical analysis is concerned, so far price action just keep printing higher swing highs and higher swing lows. This is the daily time frame of euro dollar currency pair. Okay, so if you apply the RSI, let's go to the insert indicators, oscillators, RSI, relative strength index. RSI looks a little bit, overbought, but we have seen in past that the RSI was overbought, and we only got a slight pullback in price action. So I expect a kind of a drop in price action, and we might try to retest this level. Prices action is probably going to revisit 1.1264 area over here. Next one is the US dollar versus Canadian dollar, USD CAD. So USD CAD is actually finding support at 1.3817 area, and we might get a push in market to the upside at around 1.3974 area. Okay, next one is the Australian dollar versus US dollar currency pair. Okay, Aussie dollar currency pair, we got a nice support over here. Then we have some another support over here as well. The price action, the way I see, price action is probably going to fall back down in AUDUSD currency, but that's a long-term forecast. Let's go to the daily. So in daily time frame, I'm basically expecting a drop in price action. Why I expect that? Because we have some pretty good resistance levels up there. And if I zoom in a little bit, you can notice we got these spikes over here in price action. Let me zoom out a little bit, and I want to show you some levels. So this was the resistance over here. Then we got some resistance up here as well. So this is the old swing high, and market is hitting the same level over here. Okay, this was the same level which provided the support in past. So based on the pattern analysis, it's quite possible that we are going to find aggressive sellers inside AUD-USD currency pair, and the chances are price action is going to drop more before it rises back up. Now, how far it's going to drop? The way I see, we are going to get a drop in price action around, I would say, 0.6193. Why? Because we have support over here. Okay, so this is the expectation, and the way I see, Aussie dollar is most likely going to drop. It's going to retest 0.6193 level. So this would be an important area, and if market is going to fall, this area would probably provide us some buying trading opportunities as well. But currently we could look for potential sell trading chances as well. But do not just jump into the market. You need some sort of a trade setup, maybe a candlestick pattern, to actually open a sell trade. Like what I mean by that is, if you go over to a 4-hour time frame, you want the price action to break the support area. The support is present at 0.63341. So if price action breaks this level, and you get a drop in price action over here, uh, the chances are price action is going to fall more. Okay, so we'll see how it goes. In high time frame, it is hitting the resistance level, so that this might be a good area to look for a sell trade if market if price action manages to break it. Okay, next one is the spot gold. Let's take a look at a chart of gold. Okay, gold is falling down. If I extend this trend channel, and you see price action is almost there to hit this level. We're getting this sideways price action. This looks like, to me, we're getting some kind of a triangle type formation over here. Okay, so it seems to me gold is going to drop. Okay, so before I end today's session, let me discuss a trade idea for the spot gold. So a good idea is to wait for the price action to break out of the triangle and once you get that decline, then the chances are high that gold is going to drop further. I'm going to change the color of these two lines. Let's use a okay. So this area, this breakout point somewhere over here, that's the level that you need to watch out. So if price action is going to break slower, that would be a good selling spot inside spot gold. This is the 1 hour chart. Okay, so if you have any questions, feel free to type inside the chat box and I will be happy to answer it. So what we have learned today, we discussed about the Canada's GDP. We discussed about the USA Non-Farm Payroll data report. Also checked out the Euro dollar, Aussie dollar, USD CAD, and spot gold. Okay, well, what you should do next is you can check out our website. You can check out our social media pages. If you want to learn more about trading, visit the Trade Geek and access free trading courses for beginners, intermediate, and expert traders. So I would like to say thank you for hanging around and see you at the next trading webinar on Tuesday, May 6, 2025. So that's it for the time being from my side. Have a nice day and bye-bye.